Hi, and welcome back once again to the accounting classroom and to the part 4 of our video series where we are looking at an example question called We Do It Right Incorporated. In our previous video, we would have looked at calculating the cost per equivalent unit, which is step 2 for all of our cost elements. And then in step 3, we would have looked at the valuation of our inventory units. So far, what we would have done was to look at the value of our opening inventory units, and the cost of those opening inventory units was given to us in the question. And then we look at the remaining cost on those 450 units with respect to process 1 material, added material, labor, and production overhead, using the equivalent units that we would have calculated here in our equivalent unit table for our opening inventory, process 1, added material, labor, and production overhead. So we would have looked at that, and we came up with a final cost with respect to our 450 units that we started, because remember, on the FIFO, the units that you started prior must be started and completed in the current period under review. So the cost on those 450 inventory units is a total of $5,106. So now we are going to look at the cost for our fully completed units. So what are our fully, or how much is our fully completed units? Our fully completed units are 2,350 units. 2,350 units. So that's our fully completed units. And then, as stated previously, we need to use the total cost per unit, equivalent cost per unit, to calculate the value of these fully completed units. Why do we need the total cost per unit to calculate the value of these fully completed units? Because since these units are finished in totality, it means that these units will have some process 1 material in them, some added material, some labor, and production overhead. So all of the cost elements are here in these fully completed units. So the easiest way to compute the value would be then to go to the total cost per equivalent unit, which gives us the cost for all the cost elements, and use this figure here to calculate the value of our fully completed units. So the cost per equivalent unit will be 8.7003588806. And when we multiply the 2350 by our total cost per equivalent unit, we get a value for our fully completed units of $20,446. So when we add our fully completed units of 2350 to our the cost of our fully completed units of 2350 to the cost of our 450 opening inventory units, we get an output unit cost of $25,552. So our output units, the total output units, the units that we are either transferring to another process or we are going to finish goods, the value of those are $25,552 by taking the 5,106 and adding the 20,446 to that figure. So let's now look at calculating the value of our closing inventory for each cost element using the equivalent unit and cost per equivalent unit for each of them. So what are the equivalent units for process 1, added material, labor, and production overhead for closing inventory? For process 1 material, our equivalent units are 400 units. For added material, it is 200 units. For labor, 240, and production overhead also 240 units. So let's enter those equivalent unit figures. 400 for process 1, 200 for added materials, 240 for labor, and 240 for production overhead. So now we are going to use the costs per equivalent unit. And I don't need to go back to my other table because they're already here. So the cost per equivalent unit for process 1 material is 4.530909091. And when we multiply the 400 equivalent units by that figure, we get $1,812 as is the value of process 1 material in the closing inventory. Our added material cost per equivalent unit is $1.10. And when we multiply $1.10, the 200 equivalent units by $1.10, we get $220 as the value of added materials in our closing inventory. Our labor is 2.269449715 cost per equivalent unit, and we multiply the 240 by that number, we get the value of labor in our closing inventory units is $545. And our production overhead, the cost per equivalent unit is 80 cents. So when we multiply the 240 equivalent units by 80 cents, we get that the production overhead value in our closing inventory units is $192. So what is the value of our closing inventory that is going into our process account? In other words, that is also our balance carried down on our process account. The value of our closing inventory then is 1812 plus 220 plus 545 plus 192 give us $2,769. So when we add the $2,769 to the output unit cost of $25,552, we get a total valuation of our inventory of $28,321. So now that we would have completed the valuation of our inventory in step 3 using our equivalent units and cost per equivalent unit for each cost element with respect to opening inventory, fully completed units, and closing inventory, we will now go and we will prepare our process account based on this information. So here is a look at our process 2 account. So we know, so this is what the question asks us to do to prepare our process account. And the first thing we're going to start with is our opening balance. So we had 450 units at the beginning, and the value of those 450 units was $4,770. So we put that in here. The units that were transferred into process 2 based on the question that we did was 2,750 units. So these were transferred from process 1 to process 2, right? So therefore our units here is 2750. But what is the value of them with respect to process 1 material? The value of our 2750 units with respect to process 1 material is $12,460. So let's enter that. What is the value with respect to added material? Added material will be $3,003. The value of labor instead of this 2750 here is 5,980, and production overhead is 2108. So 5,980 and 2108. So here on our debit side, we have our total units are 3,200 units, and the total cost is $28,321. So let's look at the output of finished goods. Remember that our finished goods then will be those, we're looking at the units that were fully completed. So how will we know our output? Remember from here, our output will be our opening inventory units plus our fully completed units, or take our opening inventory plus our input units and minus our closing. So I'm going to use the formula opening plus the fully, because I know my opening and my fully completed now. My opening is $450 and my fully is $23.50. So output units will be $23.50. Sorry, $450 in opening inventory plus $23.50. Okay, that will be 2,800. So my output units are 2,800 units. So put 28 here. And what is the value of this 2,800 units? You're going to pick it up right here. The value of our 2,800 units, which is this 450 plus the 2,350 here, is $25,552. So I'm going to put that right there. And then we get our balance carried down. So our closing inventory units are 400 units, and they are valued. So closing inventory unit value is $27.69. So 400 units, $27.69. And this completes our process account. And as you can see here, that what we calculated here as the total valuation of our inventory is $28,321 and etc. That is the same figure that was here on our process 2 account. So this completes our look at our demonstration question. We do it right incorporated, and we would have went through all the steps. Step 1, calculating our equivalent units using equivalent unit table. Step 2, calculating our cost per equivalent unit. Step 3, calculating the value of our inventory units. And finally, our step 4, we use all of the information that was done prior, and to do our process 2 account. I trust that all that was shared in this video is totally understandable. You can leave your comments, your questions, and you can also like and subscribe to this YouTube channel for more accounting videos and to help you understand more concepts with respect to accounting. So thank you very much for watching this series of videos.